Holy flippity flip flop flap and smokes, everyone! The greatest crash of the century is upon us. And ladies and gentlemen, this crash cannot be stopped. And that's right, even the Federal Reserve will not be able to stop it. And everybody's wrong. Everyone is saying when the Federal Reserve pivots, stock prices are going to go to the moon, and that is a time when people should go all in. Well, everyone, I've been doing some digging, and I've been looking back at the charts, looking back at history to figure out what happened during previous crashes and when the Federal Reserve pivoted, and to figure out if that was a bottom for the stock market. And people, I've been shocked what I've found. I'm going to be going deep to tell you what is going to happen in the markets going forward and how bad the crash is going to be. But I've also got some good news towards the end on how we can prepare for this, because I had a lot of people questioning me, what should I do, what should I invest in, and how this crash could also be the greatest opportunity for those that are prepared. So everyone, let's not waste any time. Let's get straight into the news, the facts, and the data. Okay, it was an absolutely crazy week this week in the markets. We saw massive swings when markets would open in the red, then they'd swing in the green, only to be followed by another crash the next day. And on Friday, we saw another huge down day in the markets. The S&P was down around 2.5%. We saw the 10-year Treasury yield close over 4%, so that is absolutely massive. You can actually get a 4% return on government bonds now. We've seen absolute chaos in the UK financial markets. We've found out how much trouble the banks are in, and here's some other important headlines to tell us what is happening right now. Look at this, 98% of CEOs are prepping for US recession. I think they should have been preparing a long time ago, everyone. And look at this, the investing queen of 2020 and 2021, Cathie Wood's main ETF closes at 5-year low, down 78% drop from its record. And this is quite funny. In 2021, all the hedge funds, all the mainstream media were saying Cathie Wood's the new Warren Buffett. They were saying Warren Buffett's lost his touch. She's the new investing queen of Wall Street. Well, again, everyone, it's very easy to look like a genius during a bull market, and especially those that take the most risk in the bull market make the most returns. But when the markets U-turn, they're the ones who are going to suffer the greatest losses. And they're the ones that are going to be exposed for who they really are. Just speculative gamblers. And let's all take a moment to shed a tear for BlackRock. Their profits fall 18% and their assets under management have decreased from 8.5 trillion to 8 trillion. Geez, even BlackRock is doing it tough now as well. And the global elites are sending hints that there may be another black swan event coming. Look at this, Jamie Dimon says expect another surprise from choppy markets after UK pension funds nearly imploded. And yes, why you have to take everything he says with a grain of salt because he's probably shorting the market. I'm not saying Jamie Dimon's a stand-up guy at all, but I think he's right here. I think we are going to see other things explode in the financial markets coming soon. But what I really want to get in today is this speculation that the Federal Reserve is going to pivot soon and it's going to end the stock market crash. It's going to be a bottom for the stock market. Then after this, stocks are going to surge to all-time highs again. People are saying the same thing. This will be a bottom for bonds, a bottom for gold, a bottom for cryptocurrencies. Well, people, this is a question I've been asking myself as well. And you know what I like to do? I try to learn from history to try to best predict what could happen in the future. So let's take it back all the way to 2007, the last time we had a huge financial crisis, which is what I think we're going to be facing very, very soon. Let's hit the charts, everyone. So, okay, everybody, the Great Recession in 2008, we can see here in August 2007, that is when the Federal Reserve started to pivot and started to drop interest rates. Well, using today's logic, that should have been the bottom of the stock market, shouldn't it? And stocks should have surged much higher. Well, let's have a look what happened to the stock market after the Federal Reserve pivoted. So here we can see the S&P 500 in August 2007. It was at 2,100. And guess what? The Fed pivoted, but no, stocks continued to crash lower and lower, and they didn't bottom until 2009 at 1,028. So that's right, everyone. In 2007 and 2008, when the Federal Reserve pivoted and started lowering interest rates, guess what happened to the stock market? It kept crashing for another 18 months. And guess how much it crashed? 56%. So all these people speculating that the Federal Reserve will be there to save the day, well, I think they're going to be greatly mistaken. And yes, while we may have a short-term rally when the Federal Reserve announces interest rate cuts, which again, I don't think it's going to happen anytime soon, but if they do, guess what? It's not going to be for a good reason. With unemployment at record lows, with inflation still record highs, the only reason the Federal Reserve would pivot right now if there's some kind of huge financial crisis or if there's some kind of wartime event. Why should the Federal Reserve pivot when unemployment is at record lows and inflation is still stubbornly high? And let's have a look at the charts to see how the Federal Reserve rate hikes have been able to bring down inflation, or how they haven't stopped to bring down inflation. The Federal Reserve started lifting interest rates in March 2022. And let's have a look to see what inflation was in March 2022. That's right, 8.5%. Now, what is inflation now? It's still 8.2% 7 months later. So in 8 months, the Federal Reserve has only been able to bring down inflation by 0.3%. So all these people speculating to say that, don't worry, inflation will drop to 2% next year or in 2024, people, if inflation has only gone down by 0.3% in 8 months, inflation is not going to go down to 2% for years. And again, like in 1980, when we had surging inflation in double digits, inflation didn't go back down to 4% for 5 years. So there isn't going to be any pivot soon, but like what we saw in 2007 and 2008, even if the Federal Reserve pivots, it doesn't mean the stock market bottom is here, and it doesn't mean the stock market isn't going to drop lower. Now let's also look what happened with unemployment. So again, the Federal Reserve pivoted in August 2007. The unemployment rate was 4.6%, and it kept going up for another 26 months, all the way up to 10% October 2009. So again, even if the Federal Reserve pivots, it may not be enough to stop this recession, because there are forces beyond the Federal Reserve's control that is going to make this recession into a depression. The Federal Reserve can't stop the war with Russia and Ukraine. They can't fix the supply chains by lifting interest rates. They can't create more oil and gas by lifting interest rates. And nobody's asking the question, well, what is the Federal Reserve going to do if inflation doesn't go down? Well, people, I'll tell you what they're going to have to do. If inflation stays at 8% and it doesn't fall down, or if it stays around 7%, what they're going to have to do is what Paul Volcker had to do, and they have to lift interest rates above the inflation rate. So all these people saying, well, they'll just lift interest rates to 4.5% and they'll stop. And that will be enough to bring down 8-9% CPI, when the real inflation rate, if you use shadow stats according to the way they used to record it in the 1980s, is more like 17%. 4.5% is not going to cut it. Either inflation is going to have to come down to 5% and they'll lift interest rates to 5%, or if inflation doesn't come down to 5%, they're going to have to lift interest rates above 7 or 8% to bring this inflation beast back down. And what was also funny, people are telling me, well, look, you got to invest in the markets because inflation is 8 or 9%, your cash is trash, you're going to be losing money by holding cash. Well, these people that have been investing in stocks, cryptocurrencies, well, they're losing 7 or 8% a week, on top of their purchasing power going down and down. So this is why I always say you want to be investing before the inflation comes, but once central banks start fighting inflation by lifting interest rates, that's bearish for assets, because the dollar rises. When the dollar rises, all assets fall. And you know what's proof how pathetically weak these markets really are? All these Wall Street analysts are almost begging for a financial crisis, or begging for a recession or a depression, just so the Federal Reserve can pivot and pump up their balance sheets. The 1% on Wall Street would rather sacrifice the 99% to high inflation than have their stock portfolios go down another 20 to 30%, which is absolutely pathetic, people. And this is why inequality has gotten so much worse over the past 30 years, and why the standard of living has been falling lower and lower and lower, is because our purchasing power is getting destroyed, and every time there's been a crash, the rich have been bailed out, the asset prices have been going higher, while the working broke salary has been falling in real terms. So everyone, I know what you're thinking, well, okay, what does all this data, all this jargon mean for you in simple terms? Well, what this means is, everyone, the Federal Reserve is losing the fight to inflation. And when we look at history, even if they pivot, and if they pivot right now, the only reason they're going to pivot is if we have something blow up in the financial system, or if we have a financial crisis. And what history tells us from 2008, even if the Federal Reserve does pivot, it doesn't mean the stock market is going to bottom. It could mean we could see another 30% stock market crash from here. So everyone keeps asking me, what should I do? What should I invest in? People, keep hoarding cash on the sidelines. Cash is going to be king again during this crash. People can actually earn interest on your cash right now. And even though CPI is 8 or 9%, inflation's high. Well, if you put your money in the markets now, you could be losing much more than the annual inflation rate. But you watching now, yous that have been preparing for the past 2 years, yous that have been prudent, yous that have not been speculating, yous that have not been taking on debt, yous that have been saving cash on the sidelines will be greatly rewarded when the markets do bottom, I think mid to late next year. So everyone, that was just a quick urgent update, some of my thoughts and opinions on what's going on in the stock market. What do you think? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.